Okay, we're recording. So welcome everyone to the second episode of the Chicago Terps Financial Literacy Series. Today we're going to be focusing on the topic of first-time home buying, which seems almost too relevant given today's historically low interest rates, limited new supply in certain markets, and a myriad of other economic factors that I'm sure our guest speakers will be addressing today. I'm Brendan Ahmad, and I am part of a dynamic trio of alumni board members on the call today. Scott, whom you met in the first episode, will be co-hosting, and Reggie, while not on camera, will be the proverbial fly on the wall, not to be confused with the fly from this year's 2020 vice presidential debate. Our speakers today are Barry Goldenberg and Zach Curran, and I apologize if I mispronounce your names. Mr. Goldenberg is a senior mortgage loan originator based in New York and a UMD alum. And Mr. Curran is a licensed real estate broker based in Chicago. I'll let them give their elevator speeches, and then we can jump right in. And going in order of time zone, Mr. Goldenberg, the floor is yours.
Thank you. Thanks for having me today. I'm Barry Goldenberg. I'm a senior loan originator with Luxury Mortgage. We're a boutique mortgage banker / broker based out of Stamford, Connecticut. I personally cover the entire tri-state area. I cover New York, New Jersey, Connecticut. I also have the ability through colleagues of mine at my company to handle Massachusetts, Michigan, Florida, and California. I've been in the mortgage industry for 23 years. I've been a loan originator working with clients, helping them find and figure out the best mortgage products for their needs. A lot of times when you're going through this process, especially as a first-time home buyer, it's extremely scary and frenetic. You're going from renting to purchasing a home. A lot of money is involved. Obviously, an element of payment shock with your housing payment rising significantly. So there's a lot of fears and concerns. And a lot of times I feel best suited to be an educator, best suited to be a psychologist, best suited to really help hold hands through the process, because it can be really scary. I don't like to be a square that sits there, here's your rate, and here's your closing costs, and go through that. I really like to educate and put people at ease. Barry Goldenberg, and thanks so much for having me.
I think I'd add maybe stand-up comedian, because that was kind of entertaining, but that's just me. Mr. Curran, do you want to give your elevator speech?
I don't know how I'm going to follow that, but I'll do my best. Zach Curran, licensed real estate broker here in Chicago. I've been licensed for 6 going on 7 years. I work mainly in the Chicago city limits, but work the suburbs as well. Some of the close, west suburbs as well as the North Shore. Like Barry, I am super passionate about the process when it comes to helping buyers, investors, whether it's condos, multi-unit, multifamily, single-family homes. I really, really get into the service aspect of the real estate process. And, I value that more than anything.
That's awesome. So let's jump right in. Unless, Scott, you want to give a little elevator speech for yourself.
No, just happy to be here. Chicago Terps board member here for the last couple of years, and really glad to have Barry and Zach on the call with us today and talk a little bit about a very scary, sometimes intimidating process that I think that the role that Barry and Zach play in it are so critical to the success of somebody finding the right place in their price point that they can, move forward and really, build wealth for the long term. So.
Couldn't agree more. So let's set the stage. New home buyer, individual or a couple. I don't think it matters, but of course the experts can correct me if I'm wrong. And the purpose of this exercise is to assume that they're looking for a main residence, so not an investment property. They're planning to live there for 5 to 30 years. So with that scope, and they're not planning to rent or anything, so it's just for them and their family. So with that scope, what are the items that that individual or couple should be thinking about when they are starting their home buying search? Zach, I think that's for you. And Barry, feel free to add any comments too. I don't want it just to be just Zach or just you. So I'll start with Zach, and Barry, you sprinkle in some of that extra.
Yeah, thanks for the question. And again, really grateful to be part of this part of this this session today. And Some of the biggest things to think about before, when you start the home buying process is, I think the most important thing is finding a broker that knows the market and finding somebody who is going to help guide you in the process. And most importantly, a lot of, due to the online, market these days, people looking online, sometimes, that's actually how Scott and I met was, online. But, I think it's good to find somebody that has worked with maybe a friend, a family member, somebody like that. I think referrals are a big part of Barry and I's business. And I think that is super important to find a broker that is obviously great at what they do, but knowledgeable with what you're looking to do, and that comes highly recommended. So that's just one thing. I think another thing is also you want to think about your budget, and, do you want me to dive into that a little bit as well? So you want to think about your budget when you're starting the process. And that doesn't necessarily just include the purchase price of the home. That also includes your taxes, your property taxes, your interest on the home, and any other maintenance expenses that are going to go along with that home. So a lot of times people will think they have a certain budget in mind, but when you add in all those other things, that it actually, sometimes it puts a home out of their budget. So that's something really to consider, is that there was a lot more that goes into the budget than just the price of the home. Some other things to think about when you're deciding on a home is, what are your functional items? Like, what do you need? Okay, I have a lot of clients come to me and tell me, a lot of buyers, come to me and they're like, okay, I want a new home. And then I ask them, I'm like, well, what do you want in this new home? What do you currently have? And what's your vision here? Do you want, what's your bedroom and bathroom count that you want? Are you planning to have a family? Some other things are like, how much space do you need? Like, let's say an example, like you have condos and single family homes in Chicago. I'm in a condo, I'm upgrading to a single family home. How much more space do you need? You need outdoor space. Do you want a finished basement? And these days, especially, as you guys know, you want a space for an office, or a home office, I should say. So it's so funny, like it's not really funny, but this year has been the upgrade, has kind of been the upgrade market, meaning like, I want more space. I'm at home, obviously, all the time. I'm working from home. I need either outdoor space or I need a home office. Also, if you have a car, do you want a garage? Do you want to park your car on the street, or you need to park it in a garage? Do you want a yard? Do you have a dog? Things like things like that always come up. If you're starting to have a family and you're potentially living in that home for a 5 to 10 year plan, what are the schools like? What are the schools like in that neighborhood? And also, even regressing on that a little bit, what neighborhoods do you want to be in? What neighborhoods do you see yourself in? What are the schools like in that neighborhood? What's the what is the overall walk score of that neighborhood? Meaning, what can you walk to? Being in the city in Chicago, a lot of people want to be able to walk to the restaurants. They want to be able to walk to entertainment, shopping, etc. And also, a lot of times people want to be close to public transportation. So I think that's a big deal, be it in an urban area like Chicago. And also, a big thing too is you really want to consider your timeline. You want to think about, okay, when do I want to do this? Or most importantly, when is my lease up, and when does that coincide with me closing on a new home?
So Zach, what I hear you saying is it's important to find a broker that you like and you can kind of connect with, which is critical. And then you have to look at your own life and see what you're looking for, not just for the next year, if you're a single couple or, just a married couple, but thinking about, am I buying this property for the next 3 years, or am I buying it for the next 8 years when I may start a family or buy a dog? And then from there, it's what do we like to do when we're not at home? If you love being outside, maybe you're going to look for a little bit more of a little bit more land. But if you love the hustle and bustle, maybe you want to be closer to the city. And of course, different things like that have different ramifications, like taxes, property taxes, which is where Barry kind of comes in, I think, about evaluating the entire financial outlook of purchasing a home.
So Barry, step one, once we start getting excited about all of these postings on on all of the online platforms, should we be thinking about getting pre-qualified for a loan before we even step foot into a home? And I say step foot, but I know they're virtual tours now, but I'm going to use step foot because it's just popped out.
Thank you again for having me. And yeah, the pre-approval process is single-handedly in the very beginning the most important thing. Even before getting out there and finding the right home to buy, you have to know your budget. You have to know your numbers. And again, it's one thing to know what you're pre-approved for, but what makes sense for Joe and Jane homeowner is also critical. And before we even get into the nuts and bolts with my clients, I always ask, what do you want to spend a month? What is your maximum? What's your threshold? What do you want to spend each month for your mortgage payment, including your taxes, including your insurance, and if you're purchasing a condo, including the HOA fees, etc. Because it really boils down to that. I might be able to pre-approve somebody for a much higher amount than what they're comfortable spending. But again, they might have needs that I don't know about, that I might not see when I run a credit report. They might have obligations, financial obligations, or they might just want to be a little bit more conservative. They might want to travel. They might want to, they might have a vacation home somewhere else. There's a lot of different variables that I have to assess. The pre-approval process is extremely important, especially now in the COVID environment, because I'm sure Zach will tell you, I'm sure he's not allowed to show any property to anybody unless they have a pre-approval letter. Those are the rules in the tri-state area. I can share with you that you are not allowed to walk into any home. You're not allowed to have any appointments scheduled to view a home without a pre-approval letter, whether it's virtual or not. And that's good because I work so closely with real estate agents. Obviously, they're my lifeblood. My referral partners. Obviously, the past clients can always preach about you, and tell their sister, their work colleagues, their friends, their neighbors about you. But ultimately, the real estate agent is always the first point of contact. And I work so closely with real estate agents, and I empathize with what Zach you have to go through, trying to put these deals together. And working till 11, 12, 1 o'clock in the morning, negotiating offers where there's 6 other offers and trying to show why yours is better than the others. So it gets pretty crazy, but the pre-approval process is critical because a lot of people don't take the time to think how much they can spend each month. From a mortgage standpoint, to me, and the home purchasing process, it boils down to this. Finding the right harmony and balance between what you're able to use for your down payment and closing costs, what you're able to spend for your monthly housing payment, and what you have in reserves after closing. And I work very closely and intimately with my clients to try and find that right balance, that mix, and see what makes the most sense. I don't want them to get into a situation where their mortgage debt is going to consume them and suffocate them and come over them like a tidal wave. We all work to live. We don't live to work, and you want to be able to be comfortable. Naturally, in the beginning, it's always a little bit of a stretch if you're going from a renting position to an ownership position. And you'll always find a way maybe to cut a corner here or there, save a little bit here, save a little bit there. But it's always about the client. It's always about you as a first-time home buyer. It's always about you if you're trading up to your next house, but a lot of people who are viewing this series are going to be in the first-time home buying bracket, and I definitely want to focus on that. But, understanding the process, knowing what your income is, knowing how your credit looks, knowing what assets you have to use for down payment and closing costs. Are you able to get a gift from your parent? And 2 other very important points I want to point out that you might not be aware of. This COVID situation is extremely fluid, and we don't know what inning of this game we're in. If you have a 401k through your job, you might be eligible to take a withdrawal through the CARES Act. The CARES Act is allowing 401k participants to pull money out of their retirement account without any loan repayment and without any tax implications. I've had several clients in this summer and in the early fall who have elected and used money from their 401ks, from their retirement accounts without any penalty whatsoever, and it's helped them purchase homes when they never thought they could. So it's kind of like being able to think out of the box. And that's why I joked earlier about rates and closing costs, because it's so much more than that. And working with a professional and being put at ease.
Well, thank you for that. And I think you touched on a whole host of things. So we're going to have to remember all of those topics for the rest of the show, a series, session. I don't know what to call it. So let's jump ahead. We've now found the house. We've found the neighborhood. What's next? Zach, do we just like give someone the money and we're done? Like once we've identified the place, what's the next step?
Yeah. Now, so at this point, it gets really exciting, right? So I mean, it's the buyer.
Zach, I don't mean to interrupt, but I believe that when we were working together, the thing that you looked at me and said when we were ready to make that offer is, now comes the fun part. I just had to get it in there. I'm sorry. Go ahead.
Love it. I love it. No, because it's true though. This is when I get excited about the entire process. I mean, I just love it. And when Scott and I were working together, I mean, it's just this is when people get excited. This is the fun part. All right. Now we're doing it, because the negotiation, and I'll get to that in a second. I mean, that to me is the fun part. I mean, now, okay, we found the property. It's bright and shiny, right? It's bright and shiny at this point. Now we're going to get into the nitty gritty a little bit. So regress a little bit. We go into, you nail down the property. This is the home you guys want to live in for the next 5 to 7 years, let's say. Okay, now we have to see what the data in that particular area looks like. So what I mean by the data is you're going to look at closed sales that compare side by side with the property you're looking at. So like 2-bed, 2-bath condo, you want to look at 2-bed, 2-bath condos that are identical if you can find it, but if you can't, very, very close to what you're looking at. So you know how to strategize when making an offer. Okay. So and those are called they're called comparables. In real estate terms, we call them comps. Okay. So then what you do is you take comps of closed sales. I also like looking at active sales in the neighborhood too, because that also gives you an idea of what's happening in the current market too. So you can look at time on market. You can see if that will give you a little bit of leverage, maybe even a lower offer when it comes to making an offer. If you see a house that, let's say, has more than the average market time in the neighborhood, then it gives you a chance to negotiate a little bit stronger, if that makes sense.
So making an offer though, that means that I've signed a document, right? Like if I'm making an offer, or is it a verbal offer?
No, great question. So it depends on how popular this property is. So sometimes what I'll do is, I'll get the data, we'll strategize, and then as we're devising the price or the offer on a contract, on a standard Illinois real estate contract, what I'll do is I'll either text or I'll call the listing agent, and then I'll have a conversation and say, I'm giving you a verbal offer right now of X amount, and we'll have the written offer over to you shortly, along with the pre-approval.
And within that written offer, there are some monetary nuggets, right? Do we need to list how much we're putting down for earnest money? Do we need to list when that's due, et cetera? Do you want to go into that a little bit?
Sure, absolutely.
And then Barry, tell us when you come in, because I know we've had the pre-approval letter because we couldn't step foot unless we had that. So is the buyer talking to you simultaneously, or is it after we've done the offer? Do we then come to you? So first Zach and then Barry.
Sure. So like Barry said earlier, I won't, and it's a little looser in Illinois, but I don't take a client out unless they're pre-approved. And that happened pre-COVID too. I did that a few times, earlier in my career. And what happens is, like Barry said, you end up going out, and let's say you're looking at $500,000 properties, and when in all actuality, they only want to pay $2,000 a month, let's say, and they're putting 5% down. So that doesn't equal that doesn't equal out, So I'm very, very, very careful that I explain that process to them ahead of time. Say, this is why it's so important. As Barry said before, why it's so important to get pre-approved even before looking. Now, that doesn't mean I won't start a collection or a real estate search for them ahead of time, just to get the ball rolling and get them excited about, the properties on the market. And if we have to adjust those parameters and criteria in that search based off of the pre-approval, we'll do that. So, but yeah, no. So back to the contract. So you have your offer, meaning you have your offer, your written offer. You have a price on there. You have earnest money, which essentially is a good faith amount. Like basically, it's good faith in the fact that you are serious about this home. You're serious about the price of the home. You're serious about any contingencies that go along inside that contract. And essentially, that is an initial earnest money after an accepted contract. And then after attorney review closes out, then final earnest money is due.
So what you're saying, Zach, is there's a little bit of time in between making an offer, then an accepted offer, earnest money, and I think you alluded to an attorney review, which we'll talk about in a minute, before you even get to your close date, right?
Yes, sir. Absolutely. So, it's so typically, per the contract, and I'll be honest with you, in Illinois, obviously we have a certain amount of business days that the attorney review takes place. Typically, I put 7 business days. So from an accepted offer, you're going to hold an inspection within 3 days, but the attorney review period is happening kind of as an umbrella over that whole period for 7 business days. Now, just to be honest and real here, that typically goes past 7 business days. So that attorney review period in a day count is probably 14 to 17 days.
And don't worry, for those listening, since we're focusing on Chicago, we are going to touch a little bit more on attorney review because I'm born and raised in the DC area. So when I first moved to Chicago, I was really excited about attorney review because I was very fortunate to have my own personal attorney review, my father. So every time we were buying something, where I was buying something in DC, I forced attorney review, but it wasn't standard practice. So I was really glad that Chicago, that was standard practice. Like, oh, wow, great. I don't have to tell anyone this is what's going down. So Barry, are we talking to you and making sure that we're coordinating, or are you just, hey, I'm pre-approval until you get the contract and then give me the contract and I'll start the rest of the process?
No, in fact, I'm speaking generally to my clients throughout. There's always questions that come up. The minute that an offer is accepted, and Zach knows this better than anybody here, your hair stands up, your blood starts boiling, you got the jitters. It's real. Right at that moment, it is very real. It's game on. And when you have your offer accepted, so a lot of times people are just making sure they're double checking, triple checking with me, talking to me about different things, whether to put down 5%, 10% more, what makes the most sense. In theory, at this time with interest rates as low as they are, I would love to see everybody put as little down as possible and leverage your money as best to your ability. However, very, very tricky right now because a lot of desirable properties are getting multiple bids. And the only way to disseminate as to who's the best bid out of those most likely is who's coming in with the highest down payment, other than, of course, who's coming in with the highest price. So I am consistently speaking to people. And I also would recommend a first-time home buyer or anybody else to get a couple of different viewpoints, not just one. Get a couple of different viewpoints, speak to 2 or 3 people, and really end up working with who you're most comfortable with, because that's so important. This is a big life decision you're making. It's the biggest financial obligation on a monthly basis you'll have in your lifetime. And you want to make sure that you're working with someone that you're comfortable with. Obviously someone who knows what they're doing, but also will service you the right way, because so frequently in our lives, service stinks. Whether it's at a restaurant, whether it's a customer service phone rep that you're speaking to, whether it's a car salesman. And I think it's just very, very important to just get comfortable, no matter how many conversations it takes, no matter how many people you speak to.
Barry, really quick, there was one thing I wanted to ask you about, and that's throughout this whole process, obviously money is very critical, both from the pre-approval side, and I wanted to just take just a second, if you would, some of the things that a potential buyer would submit to someone like you to get pre-approved. And then also, once you're locked in and you know, buyer and Zach have settled on a house and you've made your offer, it's been accepted, what kinds of financial moves should you be making or not be making during that period? So what kinds of things do you need for the pre-approval would you have to submit, and what kinds of things are you not doing or doing after you've had an accepted offer?
Great question, Scott. There are a couple there, but great questions. Thank you for asking. So as far as the pre-approval process, I will say that credit is king. It is so important when you're thinking about taking this step to make sure your credit is in order. Make sure that you don't have any issues whatsoever, because so many times I see first-time buyers come to me. And listen, we were all young. We were crazy once. We let cards slip. We maxed out cards. We had our fun and we did things. And, you know, or maybe, you know, we co-signed a credit card for our brother and our brother went a little too crazy or didn't pay it back or what have you. So knowing what your credit is an extremely important component of the process, because if for whatever reason your credit is going to be a disqualifying factor, there are ways around that. I would never just toss someone to the curb just because their credit might not be up to par. I work with credit repair specialists. I know people in that space who I could recommend them to, and you could take certain steps. It might even be just a matter of paying some balances down. So, you know, it could be a collection account that was inappropriately put on someone's report because they thought their health insurance at their job was covering a procedure that they had. There's a lot of different examples. From a document standpoint, pay stubs, last 2 months bank statements. For somebody who owns their own business, I always like to make sure I get last 2 years of tax returns. I really need to go through them because especially when you're self-employed, you might not have your income tax returns prepared to satisfy a bank's underwriter. It might be more to satisfy your own economic reward. And that's something where I know people who make $500,000 a year, but you look at their tax returns and it says they make 70,000. So it's a completely different game. So those are the important components of what I like to document: the pay stubs, the bank statements, the W-2s, and sometimes, and obviously for somebody who's self-employed, tax returns.
And then after I've settled on my purchase price, can I go buy that new Toyota RAV4 or?
Thank you for bringing that up. Thank you for bringing that up. I would stay away from any lavish purchases. I would stay away from opening up any additional credit cards. I would stay away from any inquiries during the time frame that you would be settling on and going to contract and obtaining mortgage financing, whether it's through your bank or through a broker. I would wait and see and not take that approach and not go crazy just yet. And so many people, you know, it's funny. I know loan officers who have a cheat sheet. Don't do this. Don't change jobs. Don't do this. I mean, things happen. I mean, I have people who change jobs during the process. As long as you're in the same line of work, it doesn't matter. I mean, you know, you're not going from teaching 5th grade to becoming a day trader. That's a problem, you know, but those are the do nots. You know, just don't pay anything late during this process, no matter what. I mean, you shouldn't pay anything late, but things do happen. Issues come up. One thing I do want to mention, if I may, and I don't want to digress too much, but a lot of homeowners recently, and a lot of just regular people, have elected for forbearances on student loans, elected forbearances on credit card payments and car payments. So that's a very fluid situation right now if someone's going through that process, to make sure and consult with the bank that they're working with and their requirements regarding that. Because that's very, very important component, especially with the homeowners that we're working with on refinances right now, because a lot of people have elected these forbearances and deferments, and a lot of the banks are requiring to bring them current in order for them to complete their refinance.
Can I piggyback off that a little bit?
Zach, you go, because I think we need Barry for episode 3, forbearance, because that is my wheelhouse. I want to talk about that, but we have to stick to first-time home buying. But Barry, I could listen to you for a minute or two. So yes, Zach, please piggyback.
No, and I could too, Barry. Thanks so much for the information. And yeah, I think you even added a lot to currently what's happening this year. I mean, one, so I had a specific, so I can't stress enough how important it is to stay on track with your finances and not make any major purchases during a real estate transaction. I've literally seen it mess up half a
Would you
dozen
say it's a
deals.
red flag, Zach?
It is a red. I'm waving. We're waving that red flag. It is. So I had a situation this summer. I had some really good friends of mine buying a single family home in the city. And as soon as attorney review was up, the two-week period, inspection items were agreed upon, final earnest money was turned in, my client sent me text messages of all this furniture they bought. And it was probably $15,000 to $20,000 put on credit. And I was just like, no, no. And Barry can obviously, he can, agree with the fact that, maybe that particular amount wouldn't have messed up the deal too much, but they put it on credit. And I just told him, just because I had been burned in the past. And I told them, I'm like, guys, take it all back now. And it hadn't been delivered yet, but still, I'm like, return it because they were like, hey, we bought a bunch of furniture. Is this okay? And I'm like, no, it's not okay. Wait till you get the keys. Wait till you sign on the line. Let's wait till we close, and then you can do whatever you want. So I just can't stress that enough.
If I can add to that point, Zach, I just wanted to say it's not necessarily that the payment on the credit card will do them in from qualifying for the financing, but maxing out one or two credit cards in order to accomplish that goal could hurt their credit score and impact their credit score now, where their interest rate could rise as a result of that, because they could go from a 740 score to a 695 score. Absolutely. And that could increase their credit score. And if they're putting down less than 20%, increase their monthly PMI insurance. So everything's relative, but I just wanted to add that.
I think that's Oh, go ahead, Scott.
No,
I would just say
it's a great point.
No, guys, thanks so much for weighing in on that, because I think most people don't understand that, it's that whole, ball right there that they're playing with. It's not just an individual purchase. But in the interest of time, because I want to make sure everybody hears about the really critical information about, going through that attorney review process. Zach's alluded to it. It's usually 7 business days, but it kind of gets extended a little bit. So talk a little bit about, the first thing you're doing, which I think Zach, you said before, is that inspection, and then what you do with that inspection.
Yeah, absolutely. So I suggest to every buyer I work with, whether, especially first-time buyers, but with everybody on the buy side, to have an inspection, even on a new construction, even on a brand new rehab, a resale, have an inspection and have a professional licensed inspector, inspect the home. And typically what we always look for are your big items, your roof, your mechanicals, your appliances, your foundation, your windows, water in the basement, cosmetic touches as well. Even though we don't all necessarily ask for those items in attorney review, because those are easy to fix. But the big items are the ones that I mentioned. A good inspector will give you an update on the condition of all of those.
And once you've gotten that report from your inspector, and you're combing through it with your real estate agent, and then you're making decisions on what you're deciding what's messed up or what needs to be repaired, and what do you do with that information, Zach?
That's a great question. So like you said, Scott, the inspector will provide a report after he hosts the inspection, or after he inspects. And typically it depends on the size of the property. It could last an hour on a 1 to 2 bedroom condo, or it could be 3 or 4 hours on a single family home that has 5 bedrooms. So just so you get an idea of how long that takes. So, and the buyers need to be there as well. And then once that's done, then he actually puts together a report of everything that he's inspected. Now, not to scare off any buyers by any means, but the inspectors that I work with, and good inspectors, get down to the nitty gritty. they inspect everything. And at first, for a lot of first-time buyers especially, it can be a little overwhelming. It can be a little overwhelming, like, oh my gosh, I had this 75-page report and there's 50 things wrong with this home, and that's not always the case. So it's my job to obviously be there of service to them and help guide them through this report. So what we do from there is we decide if there's any, if there's any deal breakers. First off, it's like, okay, is there a reason on this report why you shouldn't buy the home? And that could be anywhere from like, that could be a foundation that's really, really bad, and no matter how much the seller is willing to fix it, it just might not be the home for you. It could leak, it could have major cracks in it, it doesn't support the home. The same with any big items, whether it's structurally, whether it's a roof. So we do that first. And then the next thing we do, we decide if there's credits or repairs to be made. So based off of what the value of that home has and what it looks like compared to other homes is when we decide on those credits. So we would ask for, depending on, most sellers don't want to repair anything. So let me state that they don't want to repair anything, but they're willing to give a credit, for certain items, and typically those items again are for major items. It could be
so
like
the $9 light switch that I noticed is a little bit cracked. I'm not asking them to pay for that, but the HVAC that hasn't been serviced and is clogged, and it's going to require about $2,000 worth of repair. That's something I'm asking for.
Absolutely. So I couldn't have put it better. So cosmetic touches, light pulls, doorknobs, doors that are, paint that's scratched, scratches on the floor, things like that. We don't ask for. Typically, you'll see brokers in Illinois, brokers in Chicago specifically, they'll say anything under $500, we're not asking for. But if it's something like a water leak, a faucet leak, a GFCI, which is which is actually a safety issue for electrical, those things, even though they're a smaller amount, we would ask for that. But like you said, with HVAC, windows, things like that are bigger items, we would definitely ask the seller for credits.
Barry, do you need that list if the seller's giving you a credit, or is that something that's handled at closing and you're okay because you're focused on locking in that great rate?
Good question. Interestingly enough, if there are credits for items that between the seller and buyer, I don't always want to see them on the purchase contract. Sometimes I would like them to be on a rider that's kind of exclusive and something that the bank doesn't see. If it's a credit for closing costs, most certainly I would almost rather, and I think it's better for the buyer to get a credit toward their closing costs to keep their money liquid if at all possible. Sometimes taking money off the price of the home doesn't benefit the buyer as much as it would be if they were to get, like, say, $5,000 back for closing costs. So
Barry, I know we're running tight on time. I was just hoping if you might be able to take just a few seconds and say, what are closing costs and how much are they?
That's a damn good question. That's going to vary by where you are purchasing in. Obviously, I would say, generally speaking, to figure 3 to 5% of the purchase price as a baseline for closing costs. Keep in mind, I also don't practice in the state of Illinois. So there are fees and closing costs and settlement charges in Illinois that I might not be completely comfortable and know about. In New York has different sets of closing costs in the tri-state area, New Jersey and Connecticut, and depending on where you go in the country to purchase a home. But I would use 3 to 5% as a baseline for how much 3 to 5% of the purchase price.
And these are costs that a buyer or even sometimes a seller are going to have to pay to their local municipality or county or state to purchase that home. It's not to the seller. It's for the transaction itself.
I mean, Zach could probably elaborate more on seller fees than I can, but generally a seller fee would be the real estate commission that they're paying the brokers for making that transaction happen, and also any transfer taxes that might be due to the state of Illinois or the city of Chicago in that transaction. Usually, those are seller fees. But the buyer fees, generally speaking, I would say usually anywhere from $1,000 to $1,500, which are administrative costs of applying for a mortgage, whether it be through a bank, a broker, or a mortgage banker. And then all of the other fees that the buyer generally pays are third-party fees, whether it's to their attorney, to the title company, money that they're putting into escrow, money that they might be reimbursing the seller for any taxes that have been prepaid. So generally speaking, I like to call it settlement charges more than closing costs, because the closing costs have a set of fees that go to the bank, and then everything else is more of a part of doing business.
Could we cover escrows before my dog barks? Sorry if I was distracting anyone. So escrows, who handles insurance? Who handles taxes? Do I pay that? And then is it reoccurring for the me to send in addition to my monthly mortgage payment, those as well? And then I thought there was a little trick with Chicago taxes being paid in arrears, and there's some negotiation there. So Zach, do you want to cover that? And then Barry, if you want to cover anything related to escrows, that'd be great.
Sure, absolutely. So, taxes, so something to consider, and Barry can allude to this, but your PITI, which is your principal, your interest, your taxes, and insurance, all that can be lumped in to one payment. Okay, so that's that essentially is your full payment every month. But sometimes people pay insurance separately, and that's just you can decide how you want to do that at the closing table. But typically, I see it all together, in one payment every month. In regards to taxes in Chicago, yeah, you pay in arrears. So you're essentially paying this year for last year's taxes, right? So that's basically how that works. And you can also file for a homeowner's exemption as well if you are occupying the home. And that will essentially give you a tax break on your property taxes.
Barry, sorry, Barry, do you want to handle escrows? And then we'll end it at that, because I know this is a lot to take in, and I want to save maybe some fun for 2.0 when I bring you both back, because it's like, oh, I'm buying a home now.
No, as far as escrows go, generally, the bank that you're working with will determine, based on the time you're closing and the cycle you're closing in, how much money has to be put into and collected for escrows to cover your taxes and homeowners insurance. Generally, your homeowners insurance is usually 2 to 3 months of your annual premium, and the taxes, depending on where you're purchasing, they're going to take a couple of months to start your escrow account for that. The escrow account is great because, as Zach was alluding to, if you lump everything into one payment, it kind of helps you for budgeting purposes. This is as opposed to when taxes come due, quarterly, semi-annually, annually, depending on where you purchase. It's one lump sum. It could catch you off guard, where at least if okay, I'm going to put in $800 every month, for argument's sake, to cover this, and then every time your taxes are due, it's paid. It's a one-stop shopping. It's all done by the bank. You just make the one payment to the bank and they cover everything. But at closing, they do have to determine how much money is needed up front to be able to start your escrow account with the bank.
I just realized I wasn't on mute, so we got lucky there. I just want to thank both of you for taking time today. We really appreciate it. This was really informative. I personally enjoyed it. Scott, any final words?
We appreciate you guys tuning in and helping out people. This is a really stressful process, but also a really exciting process. And so the expertise and service that both of you, give customers and clients, I know is critical to them, finding a home at a price that they can afford and, being happy. So thanks.
Awesome. Thank you so much for letting me be part of this series today.
And thank you, guys. I really appreciate being part of this. I'm passionate about helping first-time buyers. I'm passionate about helping Maryland alumni. So this is great. Thank you again.
This is awesome.
Go Terps.
So much. And with
You're the
that,
turtle.
we'll conclude as I try to find the stop button for this record thing.
Thanks, guys.
All right. Thank you, guys. Have a good one.
Thanks, guys.
All right.
Have a good night.